We're taking a look at gold. We're going to take a look at a currency pair as well. But in this video, what I want to show you is how the price moves from this red moving average. Now, this red moving average is an 8 EMA. It's an important moving average for me because I use it to validate pullbacks and so on. Triggers generally happen right around this 8 EMA. And it gives me an idea of what the market's thinking. I can see how far away the price gets away from the 8, and that will very accurately determine when the pullback is going to happen. And I can tell where the price wants to launch from the 8 when the price is going to make a move in a market direction. Now, there's a little exception with that. We're looking at gold, and what we're seeing, and this is what I want to show you, is the price never really leaves the 8 EMA in sections here. So we've got this section where the price never leaves the 8 EMA. It never really takes off from it. And we get that again in here where the price, this is not too bad. This is something that we'd expect a little bit bigger pullback. But when we have the price stuck or glued to the 8 EMA this way, what happens is the price generally trickles in the trending direction. The trades are good to take, but they might take a little bit longer than you'd ideally like for them to play out. Now we've got an 8 EMA and the price is just going to wobble along that 8. So if you're getting into a trade here, instead of the market just shooting up and getting to your target, it may do this until eventually it gets to your target. That trade may take 2 or 3 or 4 times longer to play out simply because of this wobbly sort of sideways fashion. It's never really leaving that 8 EMA, and it doesn't really want to make those huge moves gapping from the 8, but a correction isn't going to be super urgent either. So when you do have a trend that is up and the price isn't moving away from the 8, it will generally continue to move in that direction. Now, if I'm looking at a little bit different section like this, where we see that the price is moving along the 8 and then moves away from the 8. From here, we have a gap, and we see that gap in here. We have several candles that do not touch that 8 EMA, and as a result, we've got a gap. The price is pulled away from the 8. We could then be looking for a greater pullback, and then after that pullback, we can get a more focused trade in the trending direction. It will tend to pop a little bit better. Now, this is gold. Now we can take a look at this exact same thing on the Euro AUD. That's not it. The Euro Yen. We've got the Euro Yen. This is the same situation on the Euro Yen. So this is going to be the same whatever you're trading. This concept, this idea, this is from chart to chart going to be very similar. You get a moving average that is moving up. Price just isn't leaving the moving average. It's trickling along it. So all along here, we have an uptrend. The market is moving up, and it's not making very significant pullbacks, but it does continue to march upwards. Again, it's going to be slow. It's going to take a trade a lot longer to mature, to take you out at your profit target. But when we get this kind of leave from the 8 EMA, we can then expect a more aggressive pullback. And then from there, the market tends to do its normal things. Now, a market that looks like this, a market that does this kind of, this movement here, this is a little bit unusual. This is not something that happens all the time. When it does happen, though, it doesn't mean you have to stay away from the market. It is moving sideways of sorts, but it is moving in a trending direction. And if it's moving in a trending direction without any great pushes in one direction, it will tend to keep trickling in that direction. In this case, it's moving up. And if you're taking a trade anywhere in here, we've got all these little signals to go along. If you're taking long trades in here, any one of these would have done well. It would have made you money on this particular move, simply because this sideways movement is generally headed upwards. All the averages are in order. So we've got all these averages telling us that technically the trend is up. A little bit of a separation in here. So things are looking good. It is trending. But just be aware that trades that you do take in a condition like this may take a little bit longer, and you might want to widen your stop just a little bit more because of that sideways nature. The price is moving sideways, and for it to go that little extra, that's not going to be a huge deal for the market to try to do, and that may tag you out of your stop a little bit prematurely. But generally speaking, though, they're still safe trades to take. They're just going to take a little longer to play out. I hope you found this video helpful. If you liked the video, give it a like. And if you're not following, please follow Ultra Blue Forex. And if I don't see you in the Ultra Blue Forex members area, I will see you in the next video.